Okay, so now that I have my financial statements, at least the two that I'm really worried about for this course completed, the balance sheet, the income statement, I'm going to move into step 7. Talk about closing entries. So closing entries are required to get rid of our temporary accounts. Temporary accounts are all of the accounts that appear on the income statement. And if we do have a dividends account, we got to close that as well. So we're going to zero out everything from sales revenue down to the gain on sale. Those are all going to be zeroed and placed into retained earnings. To zero these accounts, right? For example, the sales revenue, it's at an adjusted balance of 83,000. So we have an $83,000 credit balance that's adjusted, right? Some things happened. We've already looked at that part of the account to get it to 83,000 as our adjusted trial balance. In order to get this to zero, which we require in our post-closing trial balance, we need to do something, right? This isn't going to go to zero by itself. So we debit the account when it has a credit balance. It's true for sales revenue to get it to zero. Would be true for this gain on sale as well. I could write the account out, but kind of might be wasted ink. It would just be gain on sale, 2,000 adjusted trial balance. We need to get it to zero. Debit it by 2,000. So I'm going to debit my sales revenue account in the closing entries. And I'm going to debit everything that needs to be debited to close. So I'm going to toss that gain in here too. This will close both of those accounts to zero. And the book talks about the income summary. I'm sorry. The book closes these straight to retained earnings. I appreciate using an income summary. The income summary gives me a clear picture of the items that are moving through retained earnings without affecting net income versus the items here that affect net income first. The income summary is really just net income. Now, it doesn't have a balance. The only time the income summary actually exists is during the closing process. So it doesn't have an opening balance. We have no net income at the beginning of the period. It doesn't have a balance all the way to the adjusted trial balance. But then when we're closing, it will have a balance before it is ultimately closed out. Here, with this entry, we credited it for 85,000. And that represents our revenues, our income increasing items from the income statement. If you just want to credit these straight to retained earnings, I won't take any points off. I just think the income summary, moving it to that first, provides a little bit better of a picture. Now we need to close all of our expense accounts. I'll do an expense account just to show you the same idea, except in reverse from the revenues applies to expenses. So wage expense started off without a balance, got up to a $49,000 debit balance at the unadjusted trial balance date. We need it to be zero post closing. So we would just credit this account to close it out. Well, crediting that account, you want to skip a line because we got to close it to something. The debit has to be here. So I'm going to skip one and then credit wage expense to show what I would have to do to close out that account at the end of January. So now this will start all the expenses I need to close. I need to close, I'm just going to going down the list of the adjusted trial balance. Amortization expense needs to go, depreciation expense, bad debt, insurance, rent, interest, cost of goods sold. Remember, cost of goods sold is an expense. It has a debit balance. It too needs to be closed. And now I can just fill in the amount that each of these needs to be credited by. We're just crediting the entire amount in each balance because we need it to be zero. Nothing should be left in here. Notice I left the tax piece off for now. We'll come back to that in a second. But first, I just want all of my debit accounts to go away. And my cost of goods sold was 39,500. So when I total all these and put them into the income summary, that gives me 108,000 for 643. So that's the debit to the income summary that I'll place here. Now that tax expense, remember, is labeled an expense, but it currently has a credit balance. So we are going to have to do what we would do to an income increasing account in order to get this to appropriately be zero. So I'm going to have to debit it 4,729 in order to get where it needs to go. I'm going to debit tax expense and credit the income summary for that amount. 4,729, 4,729, which would fall over here in my adjusted trial balance. I'm sorry, in my income summary. Now that everything's been put to the income summary, all of my temporary accounts from sales revenue down to the gain on sale have been closed to the income summary. Now I just need to find the balance of the income summary because then I'm going to close it out. 85,000 plus 4,729 minus 108, 643. That gives me a debit balance of 18,914. It's a debit balance because we had a net loss. And that was the net loss we took from the income statement to the statement of retained earnings. If it had been a credit balance, that would have been net income because my income increasing items, my credit balanced accounts would have exceeded my income decreasing items, which had debit balances that needed to be closed. But what we really needed was that because now we're going to close the income summary. We want this to be zero. And we're going to close the income summary to retained earnings because net income affects retained earnings. So I'm going to credit this account. This is the balance. I need to make a credit to close it. And that will get me my $0 balance. I'm crediting the income summary, which means that I'll have to debit retained earnings. And that makes sense because the debit to retained earnings will reduce retained earnings. My retained earnings account, remember, began at its beginning balance, 312, 650. I debited it with 18,914 here in this closing entry, which gives me my new retained earnings ending balance of 293,736. That is my appropriate ending retained earnings. I mean, we already had that because we went through and did the calculations, took net income through retained earnings, found our ending retained earnings, put that on the balance sheet. But remember, that retained earnings was the one account On the adjusted trial balance, that still was not correct for our balance sheet. That was the one I told you, don't take this, that's a beginning balance. Well, now it's no longer going to be at its beginning balance. It's at its ending balance where it should be. And that's what we need to do with our closing entries. If there had been dividends, dividends would have been closed directly to retained earnings. They do not go through the income summary. We would just credit dividends, debit retained earnings. That would be how we closed it. And again, that's why I like the income summary, because it shows me that items can affect retained earnings without passing through income, right? The big one that does that is dividends. All right, so that wraps up this video and closing entries. Next, we'll just update those balances to the post-closing balances, and I will update the Excel files so that you can see on a third tab what all the accounts would look like after they're closed.